What is up guys, my name is Ignas, welcome back to the channel. This week we started looking into the names from the utilities sector, and after doing a dividend comparison between three names, we now have picked one stock from the utilities diversified industry. That is Sempra Energy, ticker symbol SRE. So we already have it in my dividend portfolio, but now I would like to take a deeper look into it to check if it's actually worth holding on to, or if we should switch our focus to another stock from the same sector. So we have Sempra Energy, ticker symbol SRE. On the year to date, the stock is up for 16.69%, and zooming out to the last 5 years, the performance is even better, plus 28.88%. Sempra is one of the larger utility stocks with a market cap of $48 billion US. The stock is now trading at a price-to-earnings ratio of 21.62, and here we have a dividend yield just shy of 3% at 2.97. So to take a deeper look into the company today, we'll be going through financials and fundamental ratios, then at what price analysts think the stock will be trading at next year, what Superinvestors are doing with the stock, and lastly we'll go through the technicals of the price chart. Let's see if the stock is worth buying right now. An early thumbs up would be greatly appreciated, and with that out of the way, let's begin. So first we'll take a look into revenue, and this is here the company's history for each quarter of the last 5 years. In 2017, Sempra was bringing $11.1 billion on the trailing 12 months. Then in a year in 2018, that decreased to $8.7 billion. But that right there was already the bottom, because in 2019 we had it up to $10.71 billion, up 7.52% for the quarter year over year. Then in 2020 it was up to $11.1 billion, 2021 $12.18. And with the most recent quarter in 2022, revenues again up, now to $14.8 billion on the trailing 12 months. So we have seen the slump with revenue in 2018, but after that it was continuously moving up, even accelerating onwards in the last 2 years. Now let us take a look into the price-to-earnings ratio. So back in 2017 it was at 21.44. Then in 2018, with earnings per share going into the negative, price-to-earnings was at 0. In 2019, we saw the stock price moving higher, but earnings also going up, so price-to-earnings was at 15.04. Then in 2020, the price dropped, but earnings per share still went up, so price-to-earnings at 8.58. In 2021, we saw earnings moving back lower, so the price-to-earnings ratio quickly started climbing up, there at 32.81. But now with the most recent quarter in, the PE ratio went a bit lower again, now at 22.39. So there were a few moments in the last 5 years where the PE ratio was close to 30 and even over it, but then we also saw quite a few quarters in a row where the ratio was under 20 and even under 10. So with a PE of over 20 right now, we are definitely not in the best position we have been in the last 5 years. Now let's take shares outstanding. So in 2017 the number was at 253 million. Then with 2018 we already had an increase with over 9% to 276 million shares. In 2019 an increase of 7.25% at 296 million. In 2020 it dropped 1.69% to 291 million shares. But afterwards we did see another major increase, plus 9.62% at 319 million. And now with the latest quarter in of 2022, the number of shares out is at 316 million. So unfortunately this chart is pointing to the wrong direction. In the last 5 years, Sempra has been continuously increasing on their number of shares out, going from 253 to 316 million, so increasing the number of shares out by 63 million, diluting shareholders from 20 to 25%. At least they seem to be committed in bringing value to shareholders through other means. Here we have Sempra's 5-year dividend payout history. So back in 2017 the dividend payout was at $2.79. Then in 2018 it was increased to $3.16. In 2019 we had it at $3.51. 2020 $3.92. 2021 $4.25. And now with the most recent quarter in, we have the dividend payout at exactly $4.50. So in the last 5 years, the company has been increasing the dividend payout consistently, keeping the dividend yield close to around 3%. Now to check into the yield further, we'll open my dividend watch list on Google Sheets. So we are in the tab for SRE. Here it's that same dividend yield history for each quarter of the last 5 years. And we calculated that on average the stock was trading at a dividend yield of 3.08%. So the worst time to get into the stock was back in 2019 at 2.55%, under the 5-year average for 17.25%, and then the best yield was with a drop in 2020 at 3.91%, over average for 26.89%. Though if we would be getting into the stock right now at a dividend yield of 2.95%, that is just a bit under the 5-year average, minus 4.27%. Now if you would be interested in doing a similar analysis on another dividend-paying stock yourself, you are able to access this watchlist by following the first link at the top of the description. Otherwise, feel free to add a ticker or symbol in a comment below, and I'll consider adding that into the watchlist myself. Maybe you could share some interesting opportunity available in the market that I'm still missing. So we have checked into the company's history, but now let us take a look into expectations. Where the analysts think the stock will be trading at next year. Here we have information on 15 price targets from analysts. The targets range from the lows of $153 to the highs of $180 per share. On average, the target goes at $165.27, and currently the stock is trading at $153.70. This means that for next year, analysts expect that on average the stock should be going up by around 7.5%. Now let us take another angle. Here we have earnings per share estimates for next year. So 13 analysts on average expect that Sempra will be bringing $9.07 per share. If we assume that the P/E ratio remains the same, then for next year we are looking to an increase in the share price for 2.8%. So overall analysts seem to be bullish even if just a bit, expecting Sempra to increase in the share price from around 3 to 8%. Now for this part we should be taking a look into Superinvestor activity, but unfortunately there isn't anything to look into. There is currently not even one fund that is holding SRE right now. Quite the bearish sentiment from Superinvestors. Now we could take a look into insider activity too, but they didn't do any trading in the last 6 months, no buy-sell transactions here, though we can go just a bit further, and if we take a look into 1 year's history, we actually do have 6 insider transactions for SRE, though unfortunately they all been to the negative side, and these sales in total came in at $5.8 million. So for the last year, insiders have only been selling too. Now for the last part we have the price chart. Back in September the stock was trading at $176 per share, but afterwards it hasn't been going too well. On the 26th the stock dropped under the 100-day moving average, then October 5th closed under the 200, and then on the 12th under the 300-day moving average. There was some hope by the end of October. We had a relative strength index over 30 at 37, and there was a bullish crossover in the lines of the MACD. So with the price closer to $140, we started having some positive price action. On November 3rd the stock was at $150, and this week we are at $155. Now the relative strength index is close to 50, but we are seeing a bit of a slowdown in the MACD. Also it seems that the 100-day moving average acted as a resistance, pushing the stock just a bit lower, going together with the 50-day moving average. Let's see if the 50 line helps at all, but in the end if it doesn't work, I don't see much of a support at the 300 too. So the price could be going back lower to that $140 per share. So I have checked for all the parts I'm interested in, and now we can take a quick recap of what we found. In the last 5 years, revenue has been consistently moving up and even accelerating in the prior 2. Now the stock price has been moving a bit higher, but not something extraordinary, so with a P/E ratio of over 20 it seems expensive, as there has been plenty of time where it was trading with a ratio of 10 or even under. Now this part is not what we usually find, but in the last 5 years the company has increased their number of shares out by 63 million, which was an addition of around 25% overall. Though they have been increasing on their dividend payout consistently, currently the stock is still trading at a dividend yield which is 4.27% higher than its 5-year average. Now analysts are a bit bullish but not too much, predicting that next year the stock should be going higher from 3 to 8%. Though Superinvestors do not like the stock, there is not even one fund holding, and in the last year insiders have only been selling. Now the technicals aren't great either. We have just resisted under the 100-day moving average and are taking the downwards route together with the 50 moving average. So if we are still in some case interested, I'm looking at the next support for around $140 per share. We are holding Sempra Energy in our portfolio, receiving dividends, and currently we are up on the position for around 15%, but after looking into the stock I don't see much bullishness here, so it is likely that I'll be closing this position out and putting that money into another name that I am at least somewhat bullish on. What do you think, should we keep Sempra in, or reassign that capital into another dividend paying name? Do share your best idea in a comment below. Also don't forget to support the channel and leave a thumbs up under the video. Last week I've looked into several other companies, so if you are interested in any of these, then click on a video that is currently on the screen. And that was it from my side, thank you for watching and I will be seeing y'all in the next one.